In terms of how we're seeing markets at the moment, we do think that they have been fully valued and that any kind of sell-off will be quite welcomed and needed to bring valuations back to levels where you can justify them. When we go out and speak to our companies, we are getting a lot of feedback that they are seeing cost inflation coming through from energy, input costs, labour as well is starting to get a bit more expensive, seeing a bit of labour inflation coming through. And so then it's a case of looking for those companies that can adjust to these events. And some of them are quite exogenous, well out of management's control. So, you know, can these companies have nimble enough supply chains to work around a US-China trade war and the tariffs that involves? Can they innovate enough to offset costs by focusing on simplification or automation? Or do they have a product that's so innovative that it has its own demand because no one else in the market can catch up to that product? These are the kinds of companies that we're looking for in this market, and ones that can survive and even thrive when times do get tougher. When we look at small caps, we see innovation in companies like Fisher & Paykel Healthcare, market leader with a 70% market share in respiratory acute care, and really it doesn't have any competitors that are even close to where they are in terms of their technology and their innovation. In fact, their closest competitor, it's not a focus of that business. It's a larger conglomerate type business that isn't heavily focused on the niche that Fisher & Paykel are playing in. So we think that the growth can continue there. Other companies that we think can take advantage of some of the weaknesses that we see coming through 2019 would be something like ARB. ARB is in the business of selling parts and accessories for four-wheel drive vehicles. So that's more of an opportunity for 2019. It has been sold down on the back of US-China trade war fears, but we think longer term they should do quite well because they've got strong automation coming through in their factories, and also the location of their factories are quite good. So they do the majority of their manufacturing in Thailand, alongside many of the car manufacturers themselves. So they get an early look at new models of cars and can develop products and accessories for them before their competitors even get a look in at those new models. So that's an example of a company that we think has a good, sustainable competitive advantage and has gotten cheaper.